Good afternoon. I welcome you to today's Trading Spotlight webinar here together with Admirals. Let me just have a quick look. It's the 28th of October, 2022. And today we'll have a very fascinating topic here. In fact, we will cover the US market opening. And the great thing is that the US equities have seen some interesting developments, let's put it that way, over the last couple of days with the earnings releases from Google, from Microsoft already on Tuesday, then Meta. You probably have seen that Meta really sold off hard and sharply. And then yesterday, after I was closed, or after markets closed, we saw the release of Apple, a stock which you could probably imagine to be hot today, but our focus will be clearly on Amazon. And I will show you why I focus exclusively on Amazon. And in addition to that, I have let's call it something in my backhand, let's say, and we will focus on Intel. And why do I do that? This is exactly what I will guide you through. And let me just, by the way, share my screen. That's probably the way here. So if you haven't yet, if you watch the recording now on YouTube, please feel free to subscribe to the YouTube channel. Leave a thumb up if you like what you will witness in the upcoming minutes here. If you have any questions, please feel free to ask them below the video in the comment section. Or if you are now in the live event here, then also feel free to ask them in the chat box. By the way, let me just here say hello to everyone. Hello. So this is now where you can ask all your questions. Yeah, as you can see here in the first slide, so this is what we will look at: trade the news, in fact, how to interpret and trade the US earnings season. There's one very important aspect I'd like to add here. So we're not playing around. That means I will show you not just how I prepare the market opening, but given the fact that this event takes place 45 minutes from now, and in 30 minutes from now, we have the US market opening. We will see the first 50 minutes of trading. And it could be that we will get a trade here. We get to see the setup, which I game plan right now. And then I will execute on the plan. So that means I will probably trade. And this is why here, please, I have to remind you, please read carefully through the risk disclaimer here and understand that everything we do here is for educational purposes only. So if there is any trade I will make here in the upcoming minutes, given the plan we just formulated, then it's a trade which I take solely on my own and solely with the risk the risk I'm willing to take here. If you plan to copy this trade, if you plan to do something similar, take the opposite of the trade, whatever, please be sure that you understand all risks involved, and that this is something you have to make sure you take your own trades here, your own risk. You can keep all the money you make, but you can also, or you will also keep all your losses. And so this is definitely something to keep in mind here once we not just formulate a thesis, but also execute on the thesis. So please read the risk disclaimer very, very carefully. The event takes place here, as I already mentioned at the beginning, with Admirals. Let me just see. The copy of the session will be available on YouTube. Yes, so the recording will be uploaded there. I think probably on Monday. I'm not really sure whether it will be available over the weekend. So it's Friday today. I'm not really sure, but there will certainly be a recording. So, which is, by the way, a very interesting question, because you probably want to go through the whole process again and reverse engineer probably what we'll cover here, respectively, go through it step by step again to be well prepared for the upcoming week or upcoming weeks then, because we just saw the blockbuster earnings part. But the great thing about this is that there will be other very important news releases with potential volatility in the days, weeks ahead. Next week, for example, on Tuesday after hours, so Wednesday probably, we will see some higher volatility, for example, in AMD. That's something I have already on my radar. Then we have PayPal that will be on Thursday, if I'm mistaken, and these are only two names of the chunk of, or the basket of news releases and earnings releases, which will be which are upcoming. But coming to Admirals as the broker, so first of all, thanks for having me, and be sure to check out the website admiralmarkets.com for further information on what Admirals is offering. So we over here in Germany, we usually refer to Admirals as the DAX expert. So I'm having one of the most competitive offerings when it comes to DAX trading. Today we focus on US stocks. Also here, that's a very, very competitive offering with having 6 half turns commission free. And then even after that, you pay only $1, I think, per half turn, if I'm not mistaken. So long thing short, because we don't have the time now to go through all the details, check out the website for further informations. One World, One Broker, fully regulated broker, not just by the SISEC for the European area, but also from, for example, the UK here, the FCA in this context, ASIC in Australia. We have Jordan as a new regulatory entity overseeing the business. Did I miss something? Most likely I missed something. FCA, I think so, but however. So also for investment purposes, very interesting offering, because there's something we usually refer to fractional shares. This is especially not yet so important anymore. You probably remember over the last months we saw several splits for example, Tesla several weeks ago, if I'm not mistaken, but then also for Google, but also for Amazon. Amazon just dropped 100 USD now, so it's also available for the let's call it the smaller pockets in this case. So fractional shares are not that important anymore, but probably you have an end phase on your agenda for long-term investment. So fractional shares are available. And so let's jump here right into the charts, and let's jump right straight into my how I look at the assets which are hot. I will show you why they're hot in a few seconds, but just to give you an overview of what you can find where. So first of all, what I usually tend to do, by the way, this is something I didn't really work out before. Let me just do that right now. So I want to make sure that I only have the shares available which are of higher interest for me. So this is especially here, the SPY, the Qs. But here, as you can see, there's also a Tesla, for example. I left TDOC open. Usually I would take TDOC out. If there's no trade happening here, then probably we'll have a look at TDOC, because I had a trade there yesterday. You will also see the executions in the chart here. Then I usually am fully focused on the stocks I wanna watch. So I have another layout here on my right. So I'm usually working with 2 screens in this case. So I take this over. This is something we will go through in a few seconds. And there you can see there's plenty of other shares I'm also watching. So I know what's happening in the market overall, but still in my trading layout, I'm only focusing on the stocks which I consider to be hot for today and relevant for me for today. So as you can see here, we have Amazon, we have Intel, and then I have the 5-minute chart here. This is my, let's call it the trading chart. Then I have the hourly chart here to have an overview of, even though I'm trading intraday, I still want to see where we're trading in comparison to the higher time frame. We can clearly see that since August here, we clearly topped out in Amazon and have a clear downward trend. And here is also the daily chart. For example, as you can see here, 102, for example, a simple line I could draw into the chart here. So this is of importance because it shows me that if I go back here to, let me just see, one sec. It's a little unfortunate. So there we have it. You can see we're talking about new 52-week lows in this case. So we are trading with a gap of, I think, 13% or something in the pre-market. So we'll open on 2 new 52-week lows, which I consider to be a picture which is technically broken. So there's no real support on the downside. If there's selling pressure coming in Amazon, for example, I know, okay, last time we traded here is around and more than 2 years ago. So there's potentially not a form of support or region which is of higher interest for market participants, roughly speaking. And thus I say, well, we are technically broken. And if my short thesis plays out, I have a potential trade to hold, in addition to probably, let's call it a momentum scalp based on the market opening. We'll get to see whatever. So I have an overview of 5-minute, 1 hour, and the daily chart. So I have a big picture, but also a very small picture, especially in terms of how I plan to execute on the trade. So this is something I do then here via the mini terminal, for example. So it very quickly, we will probably see that in a few seconds or a few minutes in this case. So I double click here and I'm buying once the green one. So I'm buying in this case. So I place my buy stop at a certain price above the price. I'm buying lower here than the current price. I'm obviously placing a buy limit. The great thing is I can already enter here my lot size. So how many shares do I plan to trade? I already calculated at the beginning. I don't want to trade too big here. It's just for illustration purposes so that you see how this works. And as you can see also, I can simply switch over there to INTC. So this is Intel in this case, same thing. So 5 minute, 1 hour, and daily chart. Main focus will be on Amazon. Why? So certainly I know this beforehand, but this is a link here I want to share with you. So some people will now probably say, hey, we had earnings yesterday from Apple. So why don't you focus on Apple? You haven't mentioned it. We will mention it, but actually we'll see here. So I prepared it already. So we will go through the earnings. So this is my Twitter account. I tweet here the earnings releases, and this is for the informational purposes only, and they are already from yesterday evening. So I certainly knew that Apple, Amazon, and so on and so forth will present earnings yesterday on Thursday, the 27th. That was something I prepared for already last weekend with an earnings calendar I went through. But I want to make sure that I have them quickly available each time I have to prepare my game plan. What I mean with that is something I cover within an Excel file. In a few seconds, you will see what I'm talking about. And so I have the earnings available here. What you will see now is if we update the site, let me just, by the way, here, shorten things up and call this PMKT. It's for pre-market. Okay, that's what's happening in the pre-market right now. Institutionals are usually trading already in the pre-market. It's you have Wall Street open at 3:30 German time in this case, so 2:30 UK, respectively GMT. And so, well, what we can see here is the volume which we got to see already now being traded in the pre-market. Yesterday, for example, there was also Pinterest here delivering earnings, but I'm skipping Pinterest because right now we only see 350,000 shares being traded. How can I say only? Well, therefore, I usually tend to check out finwiz.com. It's another great web page, which is completely free. I will also share the link here. And that's just for, oh, I'm sorry. I think the plus behind the link I just shared is probably, is not of interest. So the link should work, finwiz.com. If I just type in pins here, for example, so you can see there's plenty of information on what about the short float, institutional ownership, so on and so forth. We will go through this now, not now, but with Amazon in a few seconds. But what's of high interest here is what do we get to see in average volume terms? So 14.76 million shares being traded the day before, not the day before, but on average over the course of the last 22 trading days, the last month. So if I now see only around 1/3 here, no, it's not even 1/3, it's 1/13 in this case, in the pre-market, not even 10% of the average daily trading volume being traded here. So that shows me, okay, they had earnings yesterday, but it's not considered to be hot. Yeah, there's some activity, okay, but it's not that the stock is super hot. This is completely different when we, for example, have a look here at Amazon. As you can see, 6.7 million shares being traded already. Let's head over right here to Amazon within Finwiz. So why is this noteworthy? Well, because on average, you see that here we have an average daily trading volume in Amazon for the last 22 trading days of 57.68 million shares. That means if we now have already on this earnings release we got to see, we have already 6.7 million shares being traded. We have more than 10% of the average daily trading volume already in the pre-market where most institutionals are trading. Simply speaking, if you look at a chart and you see, for example, a clear structure of, let's say, higher highs and higher lows, and then there's a resistance line and you say, well, the breakout is probably about to happen. It's great to identify that, but you can increase the likelihood of a breakout really playing out for you and being in the driver's seat with the breakout and some kind of a, let's say, sustainable break higher. And how do you do that? Well, the volume starts to increase. If I only see a small spike on the upside, but there's no interest taking place in the market, which means there's no volume behind this move, I don't really consider this move to be a sustainable move. So long thing short, if there's volume involved, chances of a sustainable move are much higher than it's kind of, let's call it a move from some kind of HFT, high frequency trading desk or something like, to just fish stops on the upside, on the downside. So in this case, obviously, as you can see, 6.7 million shares being traded. We also can have a look here at Apple. There's another thing. So it's also 2 million shares in Apple. Apple still is quite low in terms of the volume being traded. Here you see on average, we have 82 million shares. So that means that right now, yes, there is some kind of elevated volume, but only 2-3% of the average daily trading volume. And in addition to that, the gap is too small. It's nearly like we're gapping slightly higher than yesterday's closing price. But in case of Amazon, for example, we have a minus 12.76% here in this case. So that's the reason, simply speaking, why I skip Apple. So it's not about the earnings themselves or something. I consider them to be quite solid, to be honest. We don't go through them right now because we want to focus on Amazon, and why Amazon is also from an earnings perspective fundamentally in trouble, let's say. But first of all, I look here on how the stock reacts. Do we get to see a gap, which then lets the share, the stock really pop out and show, okay, there is some kind of movement? Then I look at the volume. Is it probably just because there was one guy trading 10 shares and the stock popped 20% on the upside, kind of a fat finger from a small guy or something? Or is it real volume? Obviously, this is real volume being traded already. So that makes the stock hot. And then let's have a look here. So the third one here is obviously INTC. So the most active trades or stocks are available for free in the pre-market once you check out your pre-market screener from MarketWatch. And you can see INTC, Intel, 1.94 million shares being traded, also with a gap significantly greater 3%. So this is the second bullet point you want to see fulfilled. So you need increased volume, 10% of the pre-market volume of the average daily trading volume overall, plus 10% plus. Okay, fulfilled in terms of Amazon. You can see gap greater 3%, minus 3%. Yes, given minus 12.76. And then you have INTC here, 1.94 and 5.9%. So the only one, by the way, with a significant gap higher or lower. And then we need to see, okay, what does it mean here in terms of average daily trading volume? Where do we stand here? What we do is we will place an INTC here, and you will see 43 million shares being traded. So slightly below that, obviously. So it's only 5%. And so that's the reason why Intel, in this case, is only our second choice. But I have it on my radar because of the gap in this case, and knowing that there's a fundamental catalyst behind this, beside the fact that Intel is not a stock which you expect to see aggressive moves on the up and downside, but which is probably a stock you want to focus on as a newbie, especially. Wait 1 second. Okay. I just have to, by the way, check one thing here in the background. Let me just check this out here. Yes, so this is the first thing, how I identify a stock. It's mostly because of the volume. And then I ask the question, okay, the numbers which came out, the earnings, how can I interpret them? What can I make out of them? So in case of Apple, we skip this. The reason we don't look at Apple was just I'm shown. What I do now is I identify, or respectively, I analyze the data we got. In case of Amazon, we're talking about, it's not a growth company anymore. I think we can say it's more value company. The growth story is over, especially if you look at the chart and then the developments over the last months. It's a company which is in the e-commerce business and which is currently fighting against against the overall trend. Recession fears. We have high inflation. We have consumers who cut their spending, who don't want to spend more money but save money instead, or they use the money to buy, let's say, I don't know, vegetables, or well, however, they're not spending as they used to spend over the course of the last 10 years. And what we also know is that Amazon is quite big in the cloud space with WS here in this case. So it's like the profit generator. Over the course of the last quarters, as we can see here with this chart from Zero Hedge, AWS was the reason, the main driver for the overall profitability of the company. We also saw that on Tuesday with Microsoft earnings, that this cloud business has or sees some, it's not slowing growth. That's probably a good way to put it. So first of all, slowing growth in the most profitable area of Amazon. That's the first red flag, let's say. But the biggest red flag is not the EPS, which was above expectation, or the, let's say, mixed results in terms of net sales, but it's the overall Q4 net sales expectation for Q4, which is usually the most active and most profitable one, at least from our perspective, since it's the Christmas area, right? So the Christmas season in this case. They see only net sales of 140 billion to 148 billion against an estimate of 155.52 billion. That being said, is the main driver for the bearishness. In addition to AWS seeing slower growth. Long thing short, it's a clear bearish to be bearish interpreted news release. We are breaking, coming back to the share, or the stocks in this case, we are breaking to 52-week lows, technically broken. So long thing short, based on what we know so far, our thesis should be on the short side. So we should favor short engagements. So this is exactly what I use. So you can see I don't overcomplicate things. So this is just a checklist. Let's say I go through. I say, well, obviously earnings. So the stock is hot. Is it really hot? I look at the volume, pre-market volume. It's increased in this case, obviously more than 10% of the average daily trading volume. The data which I can find on Finwis in this case. I check out the pre-market volume on MarketWatch. I see, okay, obviously more than 10%. Great. Let's have a look at the gap. Obviously minus 12, minus 13%. Also, that'll check in my favor. As I have other checks which are of importance. Then, for example, I also want to see, for example, and therefore we go to my slide. So this is how I prepare my game plan. So this is how my game plan looks. You can see, first of all, the ticker symbol, the two stocks I'm watching for today. So it's Amazon and it's in INTC. You can see I also highlight of which bias I have. If it's red, it's short. If it's green, I'm more long oriented. And then you can see here I have two areas with S1, S2, S3 for support, respectively R1, R2, R3 for resistance. And this is then what I fill in. I say, okay, well, what are potential areas of support and resistance? Inflection, not of importance today. In case of INTC, probably we could say 28. It's probably a good way to put it. Let's just type this in. But first of all, how do I get support and resistance? Therefore, I highly recommend looking at the pre-market. You won't see the pre-market here in the MetaTrader. So this is for trading purposes only. When I do my research, or when I check out the volume and so on and so forth in a stock, I have trading view here, and I have then in blue the after hours, and I have in orange here the pre-market, which is taking place. And now, as you can already see, there were quite clear levels. In this case, it's a 5-minute chart. They're quite clear levels we look at here, and as you can see, this is 98. We're currently trading around this level, and we have 94 on the downside here. So probably 95, probably a better way to put it. Yeah, 95 is probably better. So let's go up to 95. And now what I do, or what I want to see is these levels to be broken, held, in addition to those two blue line, or it's not the blue line, it's a little unfortunate. So you can see here, this is the volume weighted average price. So the price which was you saw trading happening against, and then how much volume was done there. And based on that, you have then an average price which we can see here with this line. And right now, the VWAP, you can see it here, is around 96.50, yeah, around slightly lower than that. So in the pre-market, we're trading above that level. Okay, so I have 98. You can see where I get these levels from. So I say, okay, we have 94, 96, respectively, probably 95. On the downside, you have 98 on the upside. We're currently trading at 100 as a psychological level. Remember, we are looking for short engagements. And then I'm filling here the gap. The last time I do this is, by the way, right now, 5 minutes before we start. Let me just here head over to the pre-market screener and have fresh numbers. I, by the way, need these numbers. 8.33 minus 11.75 minus 11.75, 833. Because I want to review my trades afterwards. So I use these. If I make a trade, you will find all this data within my trading journal then, because this is something 666 and 2 million shares being traded. This is something I use then as a kind of a first filter of the stocks I traded. Were these stocks the right ones? That's a simple way to put it. Or if I have a losing trade, for example, I use these data points here to find out, well, why did I take the trade if this wasn't fulfilled or if this wasn't fulfilled? That didn't make sense. So I really need these data points, objective data points, to decide whether that the trade made sense or it didn't. So then I have here the news. There's also something I will fill in my trading journal. Here's the game plan. You can see here the gap. You have the average daily trading volume, show a quick glance of whether that was, in fact, the pre-market volume was more than 10% of the average daily trading volume. I have also the ATR. So what can I expect if the market moves in my favor? What is an extension on the upside, respectively on the downside in terms of ATR? I also want to make sure that my stop is not within the noise, let's call it, of the overall market environment right now, which makes it very, very handsome in this case to have an overview of what's the average daily trading, average true range of the stock I'm trading. And then I have a look here at the short percentage, in this case 0.82. This is not interesting right now because Amazon is a classic blue chip stock, but in case of TDOC, for example, yesterday, that was interesting because the choppiness on the downside most likely resulted out of the fact that there was a short float in the stock. I get all this data, by the way, from Finwiz. So you have all the data on the website there for free that we had in TDOC, for example, still have a short float of 21% or something like that. And then we have the institutional ownership. Also important, blue chip, 59, nearly 60%. So probably there's now some institutions saying, well, we don't believe in Amazon anymore. We see some stronger headwinds in the near future. So probably we don't want to be long the stock anymore. And so that's in fact it. And based on that, I formulate then a game plan. And instead of now formulating the game plan here, I want to make sure that we head over to the chart. So now is the market opening. So it's 3:30. As you can see here, now the volume comes in. And what I now do is, by the way, also, let me just see this stock. So what is it? 79.1, around here. So I will now make this different because as an orientation, it's my opening print in this case. So as you will see here, trading hasn't yet started. So in these stocks, here when trading the CFD, you see that there's no trading taking place in the first 5 minutes of trading. Some might say, well, that's a little unfortunate because sometimes you want to trade the opening drive. I like that I can trade within this time span because there's lots of noise and lots of choppiness around this. And so this is really filtered out. So our trade, the first trade we can make is 5 minutes after the market opened. And now, based on what I formulated, you can see there's a bullish opening drive, as you can see here. And by the way, this is a scenario I have in my game plan. I say, well, probably there's an initial opening drive higher, but then around 98, in this case, it's 90, not 98, but it's obviously my R2. It's 100 we are currently facing. Let's see whether we hope below. I don't know yet. So that's just the market develop, let's say. I see the opening drive higher, but this doesn't mean anything, at least not for now. based on my thesis. So what I say is now, I want to see whether we can reclaim that level. If so, well, I don't want to be trading Amazon anymore, at least not based on my game plan and within the first 30 minutes of trading, because I say, well, my thesis is short. Based on what I know so far, it's not positive. And so I expect, especially with the break lower, I expect, by the way, we have to adapt also here. I just realized that I probably should also have a 102 there. Why? Well, we know that 102 is this significant 52-week low. So it's probably possible that we also spike into this level. But however we put it now, you see the opening happening, but it's not sad that this is a sustainable move. So what does it mean? Well, it means that if we now drop back below the opening print, which is around 98, respectively, if we push back below VWAP, which we can find at 98, I will be probably short. And this is exactly what I formulated here. If stuff into the open, you can see that here. So in fact, it wasn't 98, but it was 100 in this case, and rolls over here, then short if drives back below VWAP in this case, respectively, since VWAP and the opening print nearly correspond with each other. So I want to be short here. So you can see there, I already formulated the plan, and all I need to know right now, or all I need to do is, in fact, I need to short against that level, or I want to be short if we drive back below here the VWAP 98 in this case. So this is where I place my order. So we still have 2 minutes left. It would be very unfortunate, certainly, if this happens within the first 3 minutes of trading. But still, this is my game plan right now. So that's all I need, or all I have to do. So I prepare based on the news I have. I say, okay, well, obviously we spiked into 100. We have trouble here, so we're rolling over against that level. As of now, we haven't broken back below VWAP, as of now, at least. But if we break below VWAP again, I want to be short, and then I want to trade a momentum drive on the downside, which is probably bringing us to the pre-market lows, which is around 95 in this area here. So which means right now I'm just waiting that we open, and then we take it from there. So right now, in fact, it's a very, very intense period here, but I really know what I want to see. I have a plan. The stop would be above the intraday highs here in this case. If we get to see such a break lower, in this case, again, VWAP is my line in the sand, let's say. If we break below that level, so right now it's 98.40, this is where I place my short sell stop in this case, placing the stop above 100.50, so around $2 of risk in this case. And then I want to see a momentum drive lower, which is in this case aiming first target around 96, probably 95. So that's it over here. So now we have 15 seconds left. We will see that somewhere here we will open, and then we'll in fact jump in right into the action. In fact, so when we have VWAP, let's wait for the next 1 minute candle, 98.45. Okay, so this is, you can see here. So we are going for 98.45. So this is where we place the stop. Sell stop in this case. Then we can directly place here our stop loss. We know that the high was 150. And that's it. That's in fact it. Let's now see whether we drive back below VWAP. You can see I'm not working with a take profit here because I don't know whether there will be a more aggressive move on the downside or not. As you can see here, I also have formulated a way how to manage the trade. So what I will do is that I will work if I'm getting filled and see the market move in my direction. What I want to see then is the EMA 9 being not being broken, but the EMA 9 is my kind of momentum stop management, trading stop. How can I say that? I really consider the momentum on my side very short term, as long as we trade below EMA 9 in this case. That's in fact that. So I will then overlay it here as you can see here, so the immediate or initial opening drive is above that. So if you played this opening drive for whatever reason, then probably we can also head a little higher now. So we can probably go to 980.50. So get a little higher fill in this case. So go here for 52. So I'm really, oh, I'm sorry. Did this work? I hope so. It didn't as of now. Why is that happening? One sec. I mean, it doesn't really matter. But usually that shouldn't be an issue here. Let me just go. So now I need to be a little quicker. Okay, it doesn't work. Doesn't matter. Let's just see. Let's just see whether we will fill here. Usually that shouldn't be an issue. But as you can see here, we are having trouble around 100, around this level. So 98.54, and most likely we're getting filled right now. And then what we will do is, in fact, I will take this one over here and then see if the trade develops in my direction. So right now we should be filled, as you can see, 98.52. So that would be a fill. We're taking 7 cents lower. Doesn't really matter right now. And then just let's see if we break back below VWAP in this case, so the volume weighted average price, and then we would go for a break below 98. So this is exactly what we want to see then in this moment. So we want to see now the penetration, the break back below the volume weighted average price, and then taking on bearish momentum and a drive below 98. So this is exactly what we're aiming right now on. And if we get to see the break below 98, then I'm trailing the stop with the EMA 9 in this case. So this is exactly what's right now here, something we wanna see. So once we go below 98, so which is the opening price, by the way, which is probably also something we should keep in mind from a psychological perspective. Probably this is adding some further fuel. Some market participants probably said, well, it's an Amazon. I'm buying right on the open, and then we're pushing higher, and now they're seeing, okay, well, we pushed to 100, we roll over, now we break the opening print. This is probably adding some fuel to the fire, let's say, on the downside. And now we can see. So we are breaking 98. So what you certainly don't want to see now, in this case, is that we are getting to see exactly that. So like now you see there's a spike against 98. So there's buyers stepping in, obviously here, and now you don't want to see us pushing significantly back above the volume weighted average price. So obviously the momentum on the downside is not happening. So right now I'm still not getting overly, let's say, excited or something like that. So right now, I'm not trailing the stop, or I'm not getting nervous or something like that. If I'm getting stopped, I'm getting stopped. That's certainly something I need to take into account. But this is certainly something which you don't want to see, let's say. So if we now close back above the volume weighted average price with this strong reaction against the volume weighted average price, or pushing back above that level and against the opening print, then you probably start to think about probably we should take out at least some risk here in this context. So kind of surprising to see that, by the way. So I'm kind of surprising to really see that strength coming in here and not a stronger drive back below the market print. So let's see if how we behave around 100 if we get sellers now. What you want to certainly see if you play such a drive on the downside, momentum on the downside, is a clear break, clean break to new intraday low. So this is definitely not something you have in mind here when you get to see that. So right now the aggressiveness of the move certainly unfavorable. So you don't really have. What shall I say? I don't really have time to take out something. So probably if you get to see that and the drive is not as aggressive as we got to see now, so now I'm getting stopped. Unfortunately, that didn't work out. And by the way, short is right now over, so it's not an option anymore. So I'm not playing the short side anymore or something. But right now, I say, okay, Well, obviously there was no further bearishness happening. So you can, let me just do it that way. I will show you the trade I did yesterday in T-Dog. We have it. So similar action, was also some buyers now coming in. A little different picture, certainly not as liquid as Amazon in this case. But as you can see here, there was also a stronger drive higher. And then we rolled over. That was against the opening print. So slightly different, let's say. It's not the same picture. But what I want to show you here is the break back below this. Let's take this one out. This blue line here. So this volume weighted average price. So what you can see here is that there was a clear, clean break, and then we held below that level. So there was no real buyer stepping, and you can also see there was a quite sharp flush. I mean, again, it's not as liquid. The stock is not as liquid as and we have a liquid stock in terms of Amazon. What do I mean with liquid? I mean, let me just get this here. So if I look at Amazon and I look at the so-called shares float, you have it here. So you have 9.18 billion shares available. In case of T-Dog, it's 150 million, if I'm not mistaken. Let me just see. Yeah, 160 million. So not as liquid as when looking at the shares float, so the shares being available. And so now coming back here. So still, you get the clean break, clear dynamic, clear bearishness after breaking back below the volume weighted average price. So, and this is exactly what you want to see. Let me just, by the way, this is now getting interesting because you overshoot on the upside. Again, very strong drive. Difficult to say what to make out of this. Let's have a look here at Intel. Give this some time. Okay, the picture here is not very clean. So in this case, when it comes to Intel, you can see here I have a bullish bias because of Intel. Given what we got to see, so the numbers, the earnings are not that strong, but there's lots of negativity being baked in already. That's probably a very good way to put it. And thus, I could imagine now the stock pushing higher, especially if we hold above 2028. Why do I say 28? Well, if we head over here, let's go over to the right. Okay, here. So there is the chart, and this is the level I'm talking about. So this is a region around 28. And if we are now breaking higher and holding above that level, that's probably a region against which you could think about getting long or seeing a potential bottom forming. And lots of again, this negativity around semiconductors and all the developments there, and Intel is just one example. We could also take out AMD, for example. Some probably will also have a look here at NVIDIA in this case. So usually you say, well, there's lots of this negativity over the course of the last months. Let's also have a look here at Intel. So it's baked in. You can see that the stock nearly was cut in half within the last 1.5 years, and it's a very liquid stock and a big market cap stock. And so you see here in this context, you see that there's lots of negativity already priced into the chart, and so bad news, which don't come in as bad as expected, probably slightly better than expected, sometimes result in a sharper rally. So if I have this information here, let's have a look here. Then you say, okay, if we get to see an opening drive and holding, in this case, then above the volume weighted average price, in this case, above also the pre-market highs here, which we can find around 28.40 around, then I'm willing to take a shot on the long side. And this is exactly what we don't get to see. So you can see that we are holding 28, which is a first positive sign, but it's not that there's clear, clean bullishness right into the open. And this is something which goes, which contradicts my overall I'm taking here. So I say if breaks above 28 and holds above the volume weighted average price, then I'm willing to take a long shot and probably going for 29, probably even 30 on the downside. As you can see here, so right now, yes, we are holding above 28. This is a potential bullish sign or positive sign at least, but we are not clearly seeing buyers stepping in and pushing us significantly higher. I'm getting interested now here in terms of Amazon. So we still have trouble around 100 around, so shooting a little overshoot. So probably I give it a second try. Again, the target is to see a break below. So probably we give it a second try. So 89.90 around here. So this is where I want to short. I'm sorry. What did I do? 88.90. Doesn't it work anymore? Why? Okay, this is interesting. 1 second. So this is interesting. So probably reducing the size a little due to my stop I got. Then I go to our sell stop. I'm not really sure whether we get to see. Okay, that's interesting. That's interesting. Now within the event here, so this is where we place the order, and then I'm placing my stop here above the highs, which is 175. 175. And again, this is the same play I'm taking here. So it's the same play I'm willing to take with a drive here below the volume weighted average price. And as you can see, we're making new highs, but there's no sustainable breakthrough pushing higher. Let's have a look here at the Qs. So this is also very interesting. So look at here. So we are coming in quite strong into the tech sector. So strong opening drive. Let's have a look here at Spider, also coming in quite strongly, and but there's no follow through in Amazon, at least not as of now taking place. Which let me come to the conclusion: if we see a pull in, and if we then break below the volume weighted average price, there is a chance that we take another shot breaking below 98 in this case. So that's why I'm interested here in taking a second shot. But we have some difficult from a time perspective right now, so to keep an eye on this. But I'll keep you updated. I'll keep you updated at least via Twitter, respectively, next week, and then in regards to if this play played out or didn't. So that's it. Yeah, that's it. In fact, so usually I'm not a big fan of live trading in front of clients, really, because the focus really needs to be on the trading itself, and you really need to be well prepared into the event itself. But I just want to get the main reason for that was mainly to see how clear and clean you have to have a plan to start trading, especially around the market opening. It's such a volatile time. You really need to know why a stock in this case is hot, why it's of importance, which are the levels to watch, and then taking it from there with a clear, clean plan. So unfortunately, it didn't play out, but let's see, probably the second time or the second trade if we drop below the volume weighted average line. Let's call it the trigger line I'm looking at here. That's it from my end. So if you have any questions, please feel free. Again, if you watch the recording on YouTube, to post them right below the video. And if you have further questions in addition to that, send them over to Admirals and their service desk. They'd be more than happy to answer all your questions. That's it from my end. I wish you all the best, and talk to you again next week then with the non-farm payrolls, also a live event we will cover, and see you there. All the best. Happy trading. Watch your stops. Have a nice weekend. Enjoy yourself. Bye-bye.